Welcome to the Wealth Renegade podcast. I'm your host, Robbie Butler. Have you celebrated your financial independence today? Every once in a while, you come across an investor who has taken a step that is essential for other investors to be aware of. I am so excited to bring to you today a friend I met through the wide space of LinkedIn and social media connections. Excited to have on the podcast today, Paul Vranas. Paul, thank you for joining us.
Robbie, thank you for having me. Really appreciate all the content that you're putting out and look forward to chatting today.
Absolutely. So your LinkedIn headline says that you're a 23-year real estate investor, but you also say that this is your third generation. And I know there's an intergenerational story behind that. Often the wealth building community uses generational wealth as a tagline, and it's almost become a throwaway term. For you, it means something more. Tell us your backstory. I'd love to hear where your journey has brought you today.
Yeah, absolutely. Thank you. My journey, I call myself a third generation real estate investor. And in taking a look at my path and where I'm at today, it was very helpful for me to look into the past. And so my story as a real estate investor really is started with some seeds that were planted from my grandparents who immigrated from Greece, from small agricultural villages in Greece, where they were living in poverty, were living in war, and living in very difficult times. And they immigrated to the United States. And my grandmother and grandfather on my father's side moved to a suburb, to Chicago. They raised their kids in a neighborhood of Chicago called Logan Square in the mid 20th century. And amongst all of various amounts of different business opportunities, they started a grocery store, started with one, started with another. And I think one of the pinnacle aspects of their investments were buying a building. And they bought a 3-flat, which is really used to house 15 family members that they brought over from Greece over 5 years. And my grandmother turned that from a 3-flat into a 10-unit. So she was a value add developer, as we call it. And that set the foundation. From there, my father and 3 uncles started a vertically integrated multifamily commercial real estate firm from 1976 to 2006, and then planted the seeds for me in buying, I think, my first residential property when I was 21 years old. And so the series of I think 3 generations and has launched me to my journey of where I am today.
That is remarkable. To be able to look into the past to draw lessons out, especially across asset classes. You mentioned grocery anchored retail. You've got the multifamily space, heavy value add, density plays. To be able to look into the past and see examples of that is so cool. I think it also brings someone to realize the strategic plays that can be put into practice and some of the key partners you need. And to be able to call on family members to do that is fantastic. What a cool story.
Thank you. Thank you. Yeah. Talking about plays and seeing the history over 3 generations, we've seen bubbles and we've seen downturns. And looking back at the interest rate charts, forget about this blip right now. Let's look at what happened in 1976, when my family started a real estate firm. They bought a bunch of buildings and then interest rates went up to 18%. I've been through a couple of cycles. I graduated college in 2000 during the internet bubble, saw that burst. Was in a residential brokerage during the great financial crisis. And so I've seen these market cycles. And so I think that while there's a lot of excitement about high returns, I think knowing that there's cycles and being in it for the long term is really what, when you're looking at generations, that's real estate can really be beneficial. So it's an interesting point in time right now to have that sort of backstory and awareness.
Absolutely. So I want to talk a little about your investment goals, knowing a little bit about your buy box and your investment methodology and your thesis that you're driving. But recently you made a specific step that, as you described it, it shows a growth in your trajectory and is the next step of your journey. So tell us about what your recent acquisitions and your recent investments have looked like.
Yeah. So over the last 23 years, I've stayed really in the box of small residential investor. I've bought 6 condos that we have with nice fixed 30-year debt, originally from Chicago, which is
Mhm.
where I started buying these condos, and then moved to Denver, to Colorado 12 years ago. And so have picked up some residential properties here. And so we got stuck to say, what's our scale plan? I've been married for 12 years. We've got two kids, and we've got stuck with how do we actualize this into utilizing this? Great. We've got a big growing portfolio on paper, but how does this actually be useful to us? And how do we turn that into income? And so we worked with financial planners. We followed the methodology that our parents had as immigrants, which was you have to control everything, you have to do everything yourself, to saying, well, we're in this next generation and we have our own passions. We're not the immigrant mentality. We're trying to figure out our own passions in life. And but we know real estate is a part of that, but we don't really know how to leverage that. And so an opportunity came across last summer where a friend of mine had mentioned that he was a developer and been doing had bought a lot on a very exciting retail corridor here in Denver and was looking for investments. And it was a fairly large project, and the dollar amount that he was looking for an investment made me a little bit skittish. It was a little more than I wanted to put into my first passive syndication. And so I went to my wife and said, "Hey, there's this idea of raising capital and placing it. I really like the investment side of the business. I don't like the operation side of the business. I know I can trust this developer. And so what would it look like for me to go out to my own friends and family and network that I've built over the last couple of decades and raise capital from them and place it into this deal? That way I could not have to put so much of my net worth into one project, but be able to put a little bit, raise capital from friends and family, and then be able to do this 2, 3, 4, 5 times to have that nice diversification." And that's what we gave a try. And in a matter of a couple of weeks, had gotten soft commits for over 7 figures in equity, and closing the deal in November. And there's dirt was moving the next day, and there's cranes up, and they're building a really exciting new building here in Denver.
Wow. How cool, especially to clear on who you wanted to be in the whole wide range of investment opportunities. You said, I don't want to get your hands so dirty to drive the bulldozer and control it to the tightest degree yourself, but you wanted to be involved, but involved on the investment side. And you were able to bring on friends and family through that exact process of wanting to be involved, but wanting to limit your financial exposure. Can you tell us anything about the legal approach you took, the structures? Were you on the general partnership team? Did how did you structure this specific slice of opportunity?
Yeah. So the industry model would call it a fund of funds. So we I created an LLC where I was the GP, and then I brought in 14 LP investors that were all accredited. So we took the 506B route, and I really wanted this to be very buttoned up. So we raised capital from those 14 investors that we then placed as a single check into the developer's investment. And our entity acted as an LP for that. And of course, we were able to negotiate some preferred economics because of our large check size. And then also I was able to provide a lot more due diligence for my investors and handholding, and even now a higher level of investor relations communications than they might otherwise get, because the job of a developer requires a lot of different hats. And that for me was really interesting to say, hey, you can just be a specialist in investor relations, communications, underwriting, due diligence, which is where I love to be. It was really exciting to know that there's a lot of opportunity for developers that have a need, particularly in 2024 and in this market cycle.
Absolutely. So the typical term that people use to describe the entity you created as a special purpose vehicle or a special purpose entity. Did you have to go and learn soup to nuts all of the minutia of that? Did you learn as you went? How did your own growth process occur prior to taking on your fellow friends as investors and then placing the single check into the larger development opportunity?
Yeah. So the question was, how do I start? I
Mhm.
got my MBA in real estate finance, so I knew the nuts and bolts, but the actual practical application of it was something that I had not done before. And so for me, one of my limiting factors was I didn't want to go to my close network and ask them for money or try and pitch them on the deal or make them feel pressured. For me, that was not comfortable. And so seeing how other folks were raising capital by presenting it as an opportunity through one-to-many webinar. That really excited me because I'm investing in this and I figured I've got this unique knowledge. Why not just present this as an opportunity to bring other people along versus thumb wrestling Aunt Bertha and separating herself from $50,000 and she doesn't really know about it or that I just did not feel comfortable. So I started with just a simple webinar presentation with myself and the developer. And then once we got those soft commits, I knew that there was a lot more dotting the I's and crossing T's that I needed to do. And I actually joined a mastermind. I read a book called Raising Capital by Hunter Thompson. I joined his mastermind, which is a huge leap and a big check for me to write. But I wanted to make sure that I was doing things totally above the book and spent a lot of time and upfront money to make sure that we were working with attorney that specialized in putting together these SPV, SPEs, and syndications.
It almost goes without saying that in addition to that experience, you spent the money to learn the very strategic skill set of being able to raise capital from others to go into a larger deal. You'd already had the real estate experience to be able to identify this is a quality opportunity. It was, yes, no, you can trust the operator, but you also knew how to study the marketplace. Is that correct?
Yeah, I had all this knowledge about how real estate worked, and I didn't because of my limiting belief system of saying based on how my family a generation back had run things and had controlled things. And there's very much an immigrant sort of mentality and first generation mentality of saying you've got to run and operate things on your own. It was a big leap to say, hey, we're going to take our knowledge and market fundamentals and then entrust it and place that money with a third party. And so I knew all the textbook applications. I had done the residential stuff where I was the whole owner, but combining that knowledge of underwriting and markets and experience, and then taking this leap to move up to to be a passive investor in a much larger project, and was a great journey for myself and for my investors who continue to be surprised to know that they can invest like this. It's been a really exciting personal development journey for me.
I have this little pet theory that really all business growth, all entrepreneurship, all opportunity, all true investment is really just a personal growth experience. And it looks like we're scaling up or reaching a regional and then a nationwide perspective, but it really is just a personal growth process when you boil it down. So for you, where do you intend to go next? What's your future plan for your investment criteria, what you're mandating yourself to continue applying capital towards?
Yeah. So while I'm taking leaps with placing equity with third party developers, I am hyper focused on the market that I live in, and that's Denver. And my thesis isn't overly complicated. I feel like a lot of people fool themselves into thinking that they've got a differentiated advantage in the marketplace. And so my thesis is very simple: is that Denver is a very attractive place for folks to move to, young folks over the long term. We've seen some ups and downs in the markets, and prices have gotten fairly expensive over the last 12 to 24 months. I think there's going to be some cooling down right now, but my firsthand knowledge of and experience of the general migration and development trends here in my backyard, in addition with knowing the developers, I've built I'd say a good relationship with a couple of dozen of the top developers here in town, and knowing their plans and their pipeline and their approach for how they structure deals. What's their hold term? What is their track record? So that's where I'm focusing. And as opportunities present themselves, I'd like to do a couple of these a year and build out a nice diversified portfolio across developers, neighborhoods in Denver, and vintages, years. And I think that will provide a really nice scale plan for myself and my investors who are looking to move out of the hassle of owning properties that have been passed down across the generations, so they can free themselves up to continue to move up their journey towards self-actualization and do the things that bring them joy, but also participate in a passive way with great real estate opportunities.
So cool. So actually, at a similar event to the mastermind you joined at Raise Masters, which was only a couple of weekends ago, Tom Bilyeu was one of the speakers, and he described that for an individual, when they build a foundation of self-respect, they become impossible to stop because They can look back at their own sense of self and say, all right, I know what I need to do. For you, you've got multiple generations of that self-actualization process occurring in talking about something like Maslow's hierarchy of needs. You start at the very base level where you have food, clothing, water. You work up to love and belonging, a community. You go to a self-respecting position, and then you go towards self-actualization as the peak of Maslow's hierarchy. So for you, how does this move you up that ladder? This commitment to Denver, this commitment to growing your network in pooling capital to work with other investors and developers. How does this move you up that ladder?
Yeah, and self-respect, I think, is a really interesting way of looking at this. And one of the opportunities which I would also present as a challenge that has occurred is that for families that are similar to mine have immigrated from Greece or from other parts of the world, it's been fascinating to unpack the acceleration, the speed of which our life situations have changed over 3 generations, for example, in my situation. And so there has a lot of times there's so much change in so little time that each generation has taken things at tremendous leaps and bounds forward. But then the next generation has to look back and say, with love and respect, that generation took things as far as they could, and which is amazingly far. But now you've got to say, and that was their reality. So with love and respect, look back at your previous family's journey and really cut the tie and say, I'm going to take this, learn from what you've done, and move forward. And that takes a good amount of understanding and courage to do so. And that's really the self development and growth that I've taken and has led me to where I'm at today.
It's so inspiring to hear. And like we talked about at the very beginning, that recognition that actual generational wealth, not the flashy statement on the billboard, but the actual generational wealth journey that your family's been on has led you to the point of continuing the personal growth push, which I think is inherent in the actual building of wealth. And that has to continue in order to continue the wealth building journey too. It makes me think about my own journey in real estate investment, looking very early on and saying, this is genius, but there are scale problems that occur. You max out your Fannie Freddie loans with single family homes. That's the first ceiling a single family real estate investor hits. How do you avoid that? You gain experience in multifamily. Okay, next, often people run out of capital. How do you avoid running out of capital? You start to learn the experience in the process of working with other people's capital, and you avoid the next ceiling of either complexity or of opportunity, and you are allowed to very quickly continue that growth. Your comments about control are also fascinating because there's always this spectrum of control. You can maintain maniacal control over your own assets, but it may hamper you on your freedom to continue pushing towards the self-actualization piece. And your story describes that immensely. So if people want to follow your journey and the journey of your company, where should they go?
Yeah, for sure. Two places to connect with me. First, I'm very active on LinkedIn, so feel free to reach out and connect with me there. Second, I'd like to offer your listeners an opportunity to look at and how to evaluate their own residential real estate portfolio through a measure called return on equity. So I'll provide a special calculator for your listeners if they go to my company's website, Colfax Halstead, colfaxhalstead.com/ROE. I will provide them with a little bonus content around how to evaluate and look at their own portfolio, because the world of residential real estate doesn't have, I think, a lot of resources to understand how to evaluate that for those folks.
Fantastic. Paul, thank you so much for sharing your insights and the component of your family's journey that has led you to this space in your investor journeys. So great to meet you. And for the folks listening at home, be sure to follow Paul. He is on a trajectory, and especially in Denver, that will certainly be useful to those interested in that local market. Thank you, Paul.
Thank you, Robbie. And then for those folks in my network that are listening, I would encourage you to go back and listen to Robbie's podcast from the very beginning. He's talking about wealth management, financial planning, and real estate. Some great content there. Thanks for having me on.